Welcome to the implementation phase of standard costing. So we'll be doing computations of variances, and we'll be doing journal entries today. We will look at problem 8.42. So take just a quick look at the data. Notice that there's not really much going on. It's a pretty small problem, but those can be the ugliest kind. It's going to lead to a fair bit of computations and some journal entries, even though the amount that you see actually there is fairly small. And it's not just the amount in the table, because if you look, you'll see that there's a standard cost card. But at the bottom, very important, is some text that is going to determine how we interpret what we are doing here. So either stop and make a note of this right now, you'll need it later in the problem, or open your book or find out, however you get this. This is from the textbook, problem 8.42. So we either stop this video right now, jot it down so you can look at it, or open the book or whatever you do. Because while I have the whiteboard in front, I won't be able to show you the actual text. In class, we would normally have you open the book or use one of your devices, or use your device to actually look at the text here. So what we have is this company, Arrow Industries. We are making bows, hunter's bows. This would be like for hunting, bows and arrows, that type of thing. We have the standard quantity, standard price, standard cost, okay? And this is an introductory problem. So it's only direct materials and direct labor, and it's only one of each. So this is a getting you started on the logic problem. Okay, so let's take a look at that. Let me move my board back. Okay, and let us look at the setup. So the first thing to do, and remember there are two different ways to do this, the equation method, the table method. Always in class I use the table method because we can review the theory and the logic quite easily with the table method. So I always start, even when I'm working one of these problems on my own, I always start by setting up the form of the tableau. Okay? So here we go. Remember, we're looking for three columns here. We have the actual column, the flexible budget column, and the standard cost column. So the actual column is always AQ times AP. The flexible budget column is AQ times SP, standard price. And the standard cost column is always standard quantity times standard price. Okay? Now it happens that in many problems you actually don't have to do this separately often. The total is given to you. That's one of the few columns it's one of the few numbers in a larger problem that fairly regularly they just give you this. They'll tell you the total amount spent or something like that. So very often you don't have to break this down. Almost every problem, though, you're going to have to break these down and deal with them separately. So it depends on the problem quite a bit as to what you have to do. So let's take a look at our facts here. So we need to set this up and come up with our actual quantity for direct material. Little mistake here. I should have left a space down here where I could have written DM. I'll squeeze it in, and you won't maybe not be able to see that. But on your page, put another column off here to the side so you can put DM. I somehow put another column off to the side here, which I don't need. I don't know why I did that. And so we need to figure out what the actuals are. Now, as a beginner, even if they're giving you the answer, still figure it out. Still compute the AQ and the AP. Because as part of your practice, it stretches your brain to try and derive these. Now, on an exam, if they give it to you, save the time and don't do it. But make that a choice that on your practice, you're making it hard, and you'll challenge yourself to figure out the AQ and the AP. So let's take a look then at the actual quantity of direct material. Look down, you'll read the text. During November, we purchased 160,000 pounds of direct material. Okay, so that is what you need to write down here. Okay, 160 pounds. Remember, we don't have to worry about pounds, kilos, whatever. Even historically, like in the 1950s or whatever, we still would never have converted pounds to ounces or any of that. It would have always been decimal equivalent pounds. So it's easy to work with that. So we purchased 150,000 pounds at a total cost of $104,000. So 150,000 pounds times something was equal to $304,000. So this is one of those times when you don't actually need to compute or know what the AP is, the actual price. It's not really part of the problem. But like I said, when you're a beginner, it's good to fully fill out everything just to develop that muscle. So if you take your calculator and take 304 divided by 160, you can get the $1.9 per pound right here, right? So it just fills out your mental model. We will not need it in this problem. Notice that's the only place that the AP appears. It's not used for anything, or the only thing it was used for is to get this number, and this number was given to us. So that would be very much a common thing that you will experience in this column, is that a fair number of times they're just giving you the total of the actual expenditures. Now we need to look at the middle column, and the warning bell kicks in. The middle column in this method, the middle column has to be done twice. You'll notice with the formula approach, you have two different formulas, one formula for the purchase variance, one for the usage variance. And in each of those formulas, you use a different number. When we're doing it on the schedule method or the table method, we have to do that. Not simulate it. Well, the way we execute that is by doing the center number twice. So we need two AQs. We need the actual quantity purchased, but we also need the actual quantity used, because material can be inventoried, so we have to always do that twice. If you like or I would urge you, no matter whether you like it or not, go back and check the formula approach, and you'll see that the two different formulas are each using a different AQ. Okay, so that's either method that you choose, you have to keep that straight. So if you're going to do when you do the purchase price variance for the number purchased, you are going to reuse this number. So you purchased 160,000 pounds, so that's your AQ for purchases. Okay, and then you need to figure out what the SP is. Let's look around and see what that SP is, and that in this case is given. So in some problems, actually in a lot of problems, you have to figure this out on your own, but in this case, because you have the standard cost card, it's given. So it's $1.80 times $1.8 per pound. I'm going to go ahead and compute this off instead of, normally when I do this myself, I try and get all the numbers up and then do the computations later. You saw me do that when I was doing the standard cost card. It's my nature, but the first time I want to show you I want to approach it in a slightly different way. Even though when I'm working a problem like this, my habit is always to put everything up there that I know before I start doing analysis. But $288,000, multiply this out, and we have $288,000, and stop and reconcile units, okay? At least in your head. Remember, you got to study this out, and it takes a little practice. What is pounds times dollars per pound? Well, visually the pounds cancel, that leaves you with dollars, okay, so you can verify that. Whenever you're in these complex problems, even this particular one is a little bit simple, stop and go back and check your problem by checking the units. The units, it's like having a second problem in the background that you can use to check your logic. So set up your problem, work it out, and then without looking at the numbers, go back and check the units to see if you've actually put the correct stuff on there. So this is your first variance. What we're saying here is the actual is more than the flexible budget. Flexible budget was what you thought you would do. So you actually spent more than what you thought. That's not good. So that means that actually this is an unfavorable variance. Right? You know that by looking. So for all variances, you have to identify them as favorable or unfavorable. If you're using the equation method properly, the sign will tell you, plus or minus. You can't leave it at the sign, you have to put a U or an F. That's canonical, in accounting. The variants are always labeled as favorable or unfavorable. The two ways, a couple different ways you can do that is in the equation method, the sign, assuming you have it set up correctly, the sign will tell you whether it's favorable or unfavorable. Up here, there are two different methods that you should use to check, especially, remember, as a beginner, slow yourself down, work hard and do these checks. One is you always want to do your computation from the right to the left. So you want to say 288 minus 304. Is that a positive number or a negative number? Well, that's a negative number. So that means this is unfavorable. So that, notice, you don't have to know any business logic there. So that method of figuring out favorable or unfavorable is just use a math test. Discipline yourself. And remember, always go right minus left. If the number is negative, it's unfavorable. Now, the logic check. Right? Look at this and say, flexible budget, that's what we forecast. That's what we think we can do. And then over here and say, okay, and this is what we actually did. We spent 304. We thought we should be able to do this for 288. So that means we spent more. Is spending more a good thing or a bad thing? Well, for the most part, spending more is a bad thing. It's unfavorable if you spend more than you believed you would spend. So U for unfavorable. So notice that there are two checks involved here. One, the pure arithmetic check, and the other is the stop and exercise your business logic check. Especially when you're practicing, do that. On the exam, if you get to be pretty quick, you can just do whatever you want, go quick, because you would have mastered this. Your expertise level will be higher. But to get there, you need to repeat different forms of understanding the answer in order to get the correct answer. So this is 16,000 unfavorable. Okay? So for the rest of the problem, I'll write it out and then we'll do the journal entry because there's a journal entry driven off of this. If we look here, remember I said I always try and put everything I know on the board before doing things. As soon as I see a 1.8 here, I actually know there has to be a 1.8 here. These two numbers have to be the same. Okay. Here, though, the SQ. This SQ is a bit tricky. It's not the most tricky part of the whole thing, but as I mentioned in one of the last videos, almost everybody stumbles with this particular one. In some books, they call this SQA, meaning standard quantity allowed for the amount of bows that you made. So what they're saying is you're going to have to look up in the problem and figure out how many bows were made, and then say how much direct material should I have used to make the number of bows that I actually made. So if you study this text and you look in here, you're going to be looking around to say how many bows did I make? We made 19,000 bows here. Okay. How much raw material should we have used to make 19,000 bows? And you look in your standard cost card, and you should have used 8 pounds of raw material for each bow. So 8 times 14,000. Did I say that right? 14,000? No, I said it wrong. It's 19,000. So 8 times 19,000 is 152,000. So this is and this is 19,000 bows times, and the standard cost idea is 8 pounds per bow. So notice I will put the units here, 8 pounds per bow. And I should put a B there instead of the D. I sort of changed it to sort of look like a B. And if you multiply that out, you will get the 52,000 or 152,000. And you check the units, and the units will be pounds. So that will be the correct number of pounds. This always is a stumbling block for people. So we do the same process here. First we have to multiply it out. So what we have is 273,000 here. And we have the 288,000. So we have a variance. And that variance would be $17,100. And we have to determine now favorable or unfavorable. You have to have the U or the F on the chart. So if you use this method on the exam, you have to have this on the chart. If you use the formula method on the exam, you have to label it F or U, right, based on the sign that you have. So let's do the same thing. Just pure math. Don't think about business. Don't think about anything else. Just say 273 minus 288. Is that a positive number or is that a negative number? 273 minus 288. Okay, you can tell that's already a negative number. So this is also unfavorable. So we have two Did I multiply that out right? Oh, you know what? I actually made the classic student mistake and caught myself. If I cared about this, I'd redo this video and edit the whole mistake out. But it's sort of good for you to see what I did. As I was doing this, I completely forgot that I have to recompute this because that 160, that's actually the direct material purchased, not the direct material used. So this is completely a wrong variance. Fortunately, on the exam or wherever, once you catch yourself, you can just stop and redo it. But notice, like I told you how to do this, and then you just watched me while I'm, talking away, actually do the wrong thing, and I wrote the wrong number down here. So we had this 288,000. We actually have to come in here and compute a complete different number here based on the number of pounds that we actually used. To figure out the number of pounds we used, we have to read through the text, see if there's something we have to solve. In this case, it's given to you. We actually used $142,500 in direct material. So we have to take 142,500, and I'm going to cheat and do something I always tell you not to do. I'm not going to put the units on here because I have a little bit of a spacing problem. But times the SP, right? And I'm going to then compute a new flexible budget amount for the amount of direct materials used, not the flexible budget amount for the amount of direct materials purchased. And so that's 256.5. If I look at the difference between these two, this minus that is a positive number, so this is a favorable variance, and the difference is the $17,100. Okay? So this then is the first set of variances for direct materials. If you're using the formula base, your formula is going to say, you're going to have a formula for purchase price variance for materials purchased, and it's going to be $160,000 times 1.8 minus 1.9. And then if you look at the direct materials usage variance, it's going to be over here, it's going to say that you want to look at the difference between these two usages. So what you're going to have is the 1.8 times 152 minus 142.5. Okay? So two different formulas. Check your formulas and you'll see that it's the same building blocks that you have in there. Now let's take a look at the journal entries that we need. So this then tells us what the journal entry is. Now, stop. I'm going to talk about this for a minute. Stop and think about it. Everything you need for the journal entry is up there. For direct material, you need two journal entries. Every other part of the system, you can do it in one journal entry. It's a little bit of a fat journal entry. It has like four-line journal entry. This one doesn't work that way because you have both raw materials inventory, but you're also transferring into work in process. So we need to do this journal entry separate from doing this journal entry. Okay? We're still going to have, now here we're going to have 3 lines. There we're going to have 3 lines. We can step back and put your accounting hat on and say, how much did we promise to pay people for that material that we bought? What was our promise to pay? Right? Like how much accounts payable did we generate? So stop and think about that for a second before, like pause the video and just, this will stretch your accounting brain out. What's our accounts payable based on the information that we have? Okay? And that is 304. It's what we promised to pay. So we know that we're going to have a journal entry that's going to say credit accounts payable 304. Next part is how do we increase the asset account? So we know the asset account that we're increasing. We bought raw materials, so we're going to have an account called RMI. Right? RMI. I'm leaving a space here to put the account and the number for the variance. There's no rule about that. You can put them in any order. Just, my habit is to put the variances between the two main accounts, but there's no particular reason, and it doesn't really matter. So RMI. So the question is, okay, what gets the debit for RMI? And stop and say, we're in standard costing. All the debits to resource accounts have to be at the standard cost. RMI is a resource account. Right? Remember when we talked about these journal entries, I said that whole first set of journal entries is acquisition of resources. So all debits now that you're in Chapter 8, all debits to resource accounts like RMI have to be at the standard cost. What is the standard cost of what we purchased? It's this, the quantity times the standard price. So it's the 288. So here we are going to debit 288. Now, this is usually a fairly easy journal entry because we're only doing, one half of it because, for direct material you have to do two different. You have to do one journal entry for this, one journal entry for that. And so you can see, because you're pretty, you're expert accountants, you can see that debits is less than credits. So to make this balance, we're going to have to put in a debit entry here, okay? And it's going to be 16,000. And the question now is, what is the account? Well, it's purchase price variance. It can be a debit or a credit because it can be a favorable or unfavorable variance. In this case, it was an unfavorable variance, so it is a debit entry. Now stop for a second and think about that. Now these are things that, with enough repetition, you don't have to think about this on the exam, I hope. But right now as a beginner, you need it's a lot of complex stuff, and the more different ways you understand it, the more solid your knowledge will be. So let me ask you a question about this. And after I ask the question, pause for a minute and think about your answer before you continue the video. RMI is an asset, right? Okay. If we have an asset, how do we increase the value of an asset? With a debit or credit entry? Okay. So your answer is with a debit entry is how we increase the value of an asset. So if you have to put any difference in the value of an asset into a contra account call, which would be a variance account, these are all contra accounts, and you want to show that the asset account actually was not as big as the liability was, you'll have to put it in as a debit balance account. So stop and work out the accounting logic structure. It's important to work this out many different ways. Just follow the numbers, make debits equal credits, plug it in and say, okay, that's the answer. And then stop and say, how can I also understand that logically? Because if you understand it mechanically and you understand it logically, it'll just be a tighter set of knowledge in your head. And always use, don't shy away from mechanical understanding. The mechanics help us a lot in accounting, a tremendous amount. Some people just say, some people focus on just learning the theory and the principles, and I think, why not do both? Because looking at the mechanics can help you back think about the theory and the setup. So here then is the journal entry from now on. So anytime you're in a standard cost system, you buy something, you're going to have a journal entry, something like this. This could either be a debit or a credit. If it is over here as a credit entry, that means that this number, the RMI, is larger than the amount paid. That would be a favorable variance. It means you paid less than what you thought you would pay. So if this number is larger than 304, if this was like 315,000, and we thought we would pay 304, that's a good thing, right? And the difference would be here as a credit entry. So credit entries are actually favorable, debit entries are unfavorable all the way through this system, because we're inside the factory and these are all costs that will become expenses. Right? So everything we do in all these journal entries is all going to end up as an expense. It's going to end up in a specific expense called cost of goods sold. There is another way to look at, there's another type of, not type. We also use variance type of accounting in another part of the system on the revenue side. We don't do it in this class because cost accounting is focused on the factory. You can have variances for revenue accounts also, even though we don't do it right in this class. And these rules reverse, right? Because for a revenue account, more is a credit entry, not a debit entry, right? But as long as we're in this class and we're talking about costs, then more means debit and less means credit entry. So there's the first one. Now let's take a look at the next journal entry. I'm going to erase this and we'll do the journal entry for this one. So we have the same logic. Basically, we have two numbers here. One of these is a standard cost for the resource that we're going to be used. The other one is the actually standard cost for what we're going to be removing from the account. Okay, because now on this journal entry, we're actually taking stuff out of RMI and we're putting it into a department. Look at this text though. This text does not say department in it, but your journal entry needs to say department. Remember, when we're in standard costing, we're assuming that we are departmentally oriented. Okay, so that department, Department A, you can call it department. It doesn't matter, you know, you get to make it up since it hasn't been defined, but you have to have the concept of a department. The transfer into the department is here at the standard cost. So we're going to say WIP, you have to do that. And I'm going to say Department A, and it's RMI, or whoops, direct material. Okay. And it comes out of RMI at 256.5. Okay? And so this amount, that has to be the difference between them. Just by observation, you can look at it, right? Because of your level of expertise, you can tell, oh, this is going to have to be a debit entry because debits are greater than the credits, and it's 17.1. And this is our raw or our direct material usage variance, Department A. Another thing you could do, actually a better way to do this is to say WIP, Department A, direct material use variance. Okay? And you can abbreviate on the exams. Otherwise, stuff would be way too long. And of course, in real life, it's all numbers, right? It's account numbers, not titles. So you can abbreviate on the exam. So take a look at this, run it through the same logic, and you'll see that from now on, you know, anytime someone says standard costing system, this needs to be what flashes in your head. That actually you have a transaction and you have everything went into the department at the standard cost, but you kept the variance for analysis purposes later. And for raw materials, everything comes out of raw materials. Okay, 256.5. Okay, based on the actual amount used. This is the amount you should have used as the 152. The amount you actually used was 142. That's one reason you have the favorable variance. You used less material than you should have used by quite a bit. So also, if I was the manager and I saw this, I'd go, wait a minute, you can't do that. Something's wrong. But, you know, this is a pretty big variance for raw materials, you know, or a pretty big favorable variance. You know, if you had this as an unfavorable variance, you could say, yeah, they were sloppy or it was bad material or something. But having a favorable variance like this is pretty crazy. But this is a problem. It's a textbook. You know, we're here to just do the numbers and do this stuff. Okay, so direct materials. Right? Now let's take a look at direct labor. So, same problem, but now we're doing the next part of it, which is the direct labor part. On your paper, and you know, the way you should do this is do one problem on a page. You know, don't lap pages over. Even if you're taking notes, try and do all this on one page, because you want the column tops to be there for the entire problem, because that's also part of the learning. It's when you come back and look at this again, think of this as whole units, not little fragments floating around. So, we once again, but I'm learning, I'm going to leave a column so I can have my inputs identified here. I'm going to come over just a little bit. AQ times AP, and over here, AQ times SP, and oops, and I started to do the A because my mouth was moving, SQ times SP. So we have the actual income information, flexible budget information, and we have the standard cost information. We're going to look at again at the same pieces of the same text that we have there and see what they have to say. We need to say what is our actual. So we're looking though for actual use of direct labor. And let's see, factory wages, 42,000, 90% of which were direct labor. Right now we're looking at direct labor, right? That's what we want to get. We manufactured 19,000 bows using pounds and 5,000 direct labor hours. Okay, so they're giving us the AQs, right? So, 5,000 direct labor hours. Let's see if they gave us a total cost. That would be total factory wages were 42,000, 90% of which were direct labor. So you'd have somewhere offline, you know, a little scratch area here, or actually, you know, when you're doing this with a pencil or something little, you can actually do it sort of, you know, right on the thing because it's small. You know, with this kind of a pen and this board, I can't do that. But 42,000, let's see if I remember that right. Yeah, 42,000 times 0.9 would give you what the direct labor was here. So that's 37.8. If you want to go backwards, you could figure that out, but it's not necessary to the problem, but it's always good as a beginner to sort of fill in all these boxes. That would be 7.56. Okay. Over here, the AQs have to be the same. Whoops, too many zeros. I fix that by putting a dot there. Okay. And our standard price we get from the standard cost card. Let me look at that. Standard price is $8 per direct labor hour. So I'm taking that other approach. Remember the approach I used with you on the standard cost card? I'm putting everything on here that I know before I start slowing my brain down and looking around and doing the analysis. At this point now, I have to figure out what the SQA, or what was the standard quantity of labor they should have used. So I need to use, probably I'm going to end up using the standard, the SQ for direct labor somehow, and say how many direct labor hours should they have used to make 19,000 bows? Okay, so 19,000 bows times 0.25 direct labor hours per bow, they should have used 4,750 bows, or direct labor hours. So it should have been 19,000 bows times 0.25 DLH per bow. Okay, and that would then give you this number, 4,750 direct labor hours. Notice this once again. This is where people sometimes get a little bit stuck. So we can multiply that out pretty easily at this point. 40,000, 38,000. Notice this is a little bit easier. We can't have an inventory of direct labor, so that means there's only one center column. Same thing for anything that we cannot inventory. It's only going to have the one, not the two that direct labor has. So variable overhead, fixed overhead, and direct labor are going to be just one column down the middle. Well, I multiplied that out. What I'm going to have here then is the two variances. And amazingly enough, because there are a lot of zeros, even I can do that in my head. This is $2,000. This is $2,200. Now I want you to stop this video, hit the pause button, and you figure out the U and F and try and do it both ways. Remember, do the pure math way, not thinking any business logic, and then stop and say to yourself, what's the meaning of each column? And the columns are standard cost is, the ultimate goal. Flexible budget was a plan, but an intermediate plan, and then the actual cost. Okay? Go do that. I will assume that you've done that. And I'll come back here and I will review the logic. The math logic is 3,800 minus 40. That's a negative number, so that means this is going to be F. 40 minus 38 is a positive number. That means that's going to be F. I said the word back here, it's going to be F, and I wrote down the U. The U is the correct answer. I should have said it's unfavorable. And this is favorable because this minus this is a positive number. I'll also then review my business logic at the same time as a learning device. I can start here and say, okay, 38,000, that was what my tightest forecast said, but my intermediate forecast said 40. So actually, my tighter forecast was the one I really wanted to meet. This is the one I really want to meet. And you know what? This one didn't meet it. So the loose forecast was actually not as good as what I thought I could do. So I'm unfavorable because flexible budget's not as good as standard costing. So not as good meaning unfavorable. Then I'm going to separately, now forgetting about everything else, I'm just going to start here and say, okay, flexible budget is what this intermediate estimate was, what I thought I could do. What I actually did was 38. Oh, look, 38 is better than 40 because these are all costs and lower is better. So that is favorable. So notice I ran that logic test two different ways. Now, journal entry. This journal entry is a single journal entry. Okay, it's going to have 4 lines to it. Remember, we have to take everything into our resource account at its at its standard cost. That means this number has to be the debit. And this number has to be the credit. Huh? This is direct labor. This is Department 1, WIP. Where does direct labor come from in our system? From the account called gross wages. So gross wages. Now we have 2 variances here. And you can do them logically, and you can just do them with arithmetic. Debits are equal credits in only one particular way there. So there are not 2 ways that you can get debits to equal credits. Just one way. So here then we can just say, okay, I have 2,000 and 2,200. They have to both, fit in there, and you can just try them out and see which one fits. Okay. When you do that, you'll find that 22 goes here and 2,000 goes there. And this 2,000, remember, this column is a usage column. And so what we have is in Department 1, we're going to have a usage variance for direct labor. So WIP, Department 1, direct labor, usage variance. And over here, we're going to have WIP, Department 1, direct labor, and this is going to be, you can call it a purchase variance if you would like. Most typically it's called a rate variance. Doesn't, as long as I get the idea, that you realize that it's a buying kind of thing associated with acquisition, then you're fine. So then this is what the journal entry looks like. And anytime you're in direct labor or variable overhead or fixed overhead, it's going to be a journal entry that looks something like this. Now, it could be 3 debits. This could be a debit or a credit. So either of these variance journal entries can be either a debit or a credit. Okay? You can also look at it, you should also look at it for the accounting logic and say, how do I make an asset go up? How do I make an asset go down? What you're saying here is that you've spent too much, okay? That $2,000. So notice, spending too much, like making the expense too high, means we're making a debit too high. So if this is unfavorable, it has to be a debit, because unfavorable means the debit's too high. And so that's why this has a debit. It shows that, in effect, the contra account is a too high debit to the main account. Same logic here, direction is opposite, that we're saying here that we spent less than we had thought we would spend, which is a good thing. And that means that this has to be a credit to show that our direct labor was lower than our forecast. We need to offset this number, has to be offset with the credit entry. So as a beginner, stop and work out the math, the arithmetic of the debits and credits, and then also try and run through the logic of how you make an expense account bigger, because all of these things ultimately will be in the expense account cost of goods sold, called cost of goods sold. So everything that we acquire in the resource acquisition process, we're acquiring that stuff because we want to use it up using the normal financial accounting rules and pass it through cost of goods sold. And so that's the logic you can use to test this, which as a beginner you should do it every time. As you speed up, it becomes more natural. You can drop that off. It will help you speed it up. It'll help you get it to be more correct. So that is problem 8.42. You need to practice this a couple of times and practice a few of the related problems. There are a couple of problems also that deal with this. And then we'll also practice problem. The next one we do will be a problem about variable and fixed overhead, which would be, another big mess. So we'll see you for the next problem.